Okay, Hans, we'll catch up with you a little bit later on. Still with me now is Yannick Naud, Portfolio Manager at Glendevan King Asset Management. We've just heard Hans talk us through the Credit Suisse numbers. It almost sounds as if they're about to embark on quite a radical step back from fixed income. Should they do a UBS?
Well, I think the rationale for being in the flow business, fixed income flow business, really changed in the last few years. It's a business usually that needs a lot of inventory. I mean, you need to be able to be a market maker and a lot of assets. What we have seen since 2007, it's because of regulatory concern in States or in Switzerland or in Europe, banks can hold much less non-government bonds in the balance sheet. I mean, in US, since 2007, the Fed is calculating that the inventory is down 78%. So all in all, the rationale, the business model for the flow business in fixed income have to change from a business model where you have a lot of inventory to a business model where you have very limited inventory. And it's a very difficult task, and not every bank can be able to do it.
We just heard Brady Dugan there move his view on tapering to slightly earlier, or his house view, I should say. What's your view? And actually, has the US run its course? Because, you know, going through record highs, is that run over?
Well, I mean, in terms of tapering, I mean, I still think that the tapering will come maybe around in March 2014, so next year, because end of October is almost impossible. December will be tricky because we still don't know how we'll play the debt ceiling afterwards, and the same story in January, February. So March could be a good date. Having said that, nobody knows what Janet Yellen is thinking, and you know, people expect her to be very dovish, but it might not be the case. So all in all, right now we're in a strange situation where the market think that, you know, bad news could be good news because it will push back the tapering further down the line.
We've had this outperformance of Europe over the US. Yes. As I've just said to you there, you know, we're record highs on the S&P. Alan Greenspan, a man who knows how to boost an economy, he says to us yesterday on Bloomberg that, you know, there's more to go on US equities. How do you think, or what's your perspective from an asset allocation, US, Europe? How do I play that into 2014?
Okay. Right now, I mean, the U.S. market is at all-time high. The last leg has been due to, not because of the earning. I mean, we see the earning season we're still early in the earning season, but it's mostly because the multiple has been higher. So instead, we see higher multiple compared to Europe. We see that the political situation is not solved in U.S. It's just pushed into 2014. We will have tapering soon. And we have some uncertainty created by all those very large fine to financial institutions. So all in all, in terms of value and in terms of riskiness, I will prefer Europe compared to States. Even though in your notes you say Europe has outperformed the US by 8%, so there's another leg higher. Yeah, so Europe has been catching up, and it's true that since the end of July, Europe has been overperforming States on the back of all those worries in the USA. Having said that, in terms of valuation, Europe is cheaper, and even within Europe, the peripheral market, I mean Spain, Portugal, Ireland, even Italy, are much cheaper in terms of valuation compared to the core Europe. So there's value in those countries. In the equities and the bonds? Yes. Okay, and which is your standout bond? If I'm looking for a return and I'm prepared to take level of risk, is it Italian? Is it Spanish? Where would you put that risk money at play? Spain and Italy now you get what, 4.1%, 4.12% yield. I think it's I mean, we have quite a lot of good news coming out of Spain. I mean, as your program shows, both in terms of GDP, in terms of employment. You're getting 4.1 in Spain. You're getting 4.1 in Italy. Listen, we've got a short time left. Buy Paris over Germany. Yes. That's optimistic, or am I too cautious? Today we will have a PMI, we'll have European PMI and French and German PMI. I think we will start to see, and in fact we're starting to see, but it's not well noticed right now, that the numbers, economic number coming out of France will be better, that the trend will be better out of France compared to Germany. Because all in all, in terms of trade balance, in terms of cost of labor, in fact, France has been improving quite a lot in the last few months. You can't really see it in the number yet, but I think it will happen.
A quiet restructuring, is that how you would phrase it?
No, I think that there's a lot of, the government itself doesn't give a lot of confidence into investing in France. Having said that, companies are restructuring pretty well, and they are well used to deal with a socialist government, and therefore they know how to adapt to the new environment.
Very quickly, you like Swedish krona and Norwegian krona, you say it could be the carry trade of 2014.
Yes, today we will have the central bank, both central banks,
yes,
the Norges Bank and the Riksbank, they will publish rate. I don't expect there will be any change. I mean, the Norwegian krona has been underperforming quite a lot this year. The Swedish krona a bit less, but it's been underperforming. I'm talking about, the yield is 1.5% in Norway, 1% in Sweden. We're not talking about incredible carry trade. But, these days in a world
We'll take a trade wherever it comes.
Exactly.
Yannick,
yes.
We're going to have to leave it there. Thank you so much for joining us this morning. Yannick Naud, Portfolio Manager at Devon King Asset Management. Coming up, we'll break down the Unilever numbers.